What's going on, everybody? Stas here. Welcome back to another video. So the markets are down right now and we have about 7 minutes left, and unless anything crazy happens, we are going to close down, and it will be the second straight red day in a row. So we got to break it down. We have to break down my thoughts on the markets. We'll talk a little bit about inflation. We've been getting the March numbers out of some countries in Europe, so we got to break that down in this video. And of course, we got to break down some stocks, charts I'm liking, some earnings reports. So if you all find value, hit the like button, subscribe, and don't forget to get your free money from Moomoo. You get one free share of NEO guaranteed, which, no joke, guys, runs out today. So if you haven't done that yet, get your free share of NEO. And on top of that, you get up to 5 other stocks, each of which could be valued up to $3,500. Just use that link down below or go to stassurfest.com/Moomoo, deposit at least $100, and boom, you get your money. And with that being said, let's dive into the video. So it's currently about 3:55 p.m. The markets are about to close, and like I said, unless anything astronomical happens, we are going to be closing down red for the second straight day in a row. We currently have the NASDAQ 100 down 1%, Russell's down 0.9%, S&P's down 1.2%, and we have the Dow Jones down about 1.2% as well. The VIX is up 8.4%, gold's up 0.1%, and we have silver down about 0.5% right now. So let's break this down a little bit, and again, let's talk a little bit about inflation. We'll do that in about a minute or two from now, but first, let's take a look at this chart right now. This is the 4-hour chart for SPY, and we're going to take a look at Triple Q, which at this point, guys, both of these charts look very similar on the 4-hour time frame. We got a bit overheated, overbought, whatever you want to call it, and we've had 2 straight pullbacks, and now on both Triple Q and SPY, we are right by the 50 moving averages on this 4-hour time frame. You guys can see Triple Q, it's pulled down to the 50 moving average, and we have SPY doing the same thing right now. You guys can see we hit about 460, 462, and now we're selling off pretty aggressively into the close. We're sitting at about $452 a share, so we are down about, let's see here, currently down about 2% from the high hit 2 days ago. And let's go back to Triple Q and see how much this is down. Triple Q is down, let's see, it's down about 2.6%, and you guys can see on the intraday chart, we're dumping off, we're slipping very aggressively. Holy crap, guys, look at that. We're falling very aggressively as the markets are about to close in 4 minutes from now. And let's see SPY. It's obviously dropping as well very aggressively on the intraday chart. So we're selling like no other. Look at that. Holy crap. Instead of a blow off top rally, we're getting a, what would you call that? A sell-off rally? I don't even know what you want to call it, but you know what I mean. That's what we're seeing right now. So this could be in I don't know if it's correlated to Germany, Spain, the numbers we're getting out of there in Europe. And it's no secret, we all kind of knew that March was going to be a very high inflation month. We all knew that, obviously, with everything going on in Europe, Ukraine, Russia, all that craziness. So we kind of knew it, but now that we're getting the numbers, maybe the markets are reacting a bit. We got Germany, and this came in, I think, maybe a day or two ago. The National Consumer Price Index rose 7.3% year after year, I think, as of March, recording an inflation rate of 5.1% in, was that February, I think. So it's growing month over month, right? It's 7.3% right now, which I was looking at it. I think that's the highest inflation they've had in Germany since the 70s. And in Spain, we got some numbers. Spanish consumer prices rose, get this, guys, 9.8% year on year in March. The country statistics office said Wednesday, so that was yesterday. So maybe the markets are slowly digesting these numbers. And quite frankly, another thing worth mentioning here, maybe the markets were just looking for a reason to sell off. I mean, we were up and away for a week, 2 weeks, and yes, the markets knew that these numbers were going to come out and be bad, especially for the US, which we get those numbers soon here. But maybe now that the markets got very overstretched, right, and the numbers are actually coming out in Europe and they're very freaking ugly, that could be the market's excuse to sell off a bit, pull back a bit, which is kind of what we're getting right now. And like I mentioned earlier in this video, as of now, we're not in any crash scenario. We're not in any scenario where markets are dumping back under the moving averages. Both SPY and Triple Q, they're both still above moving averages, which, and that's on the 4-hour time frame, which is a good sign for the bulls. So what do you guys think? Drop me a comment down below, hit the like button, and subscribe if you haven't done so already. It really helps me out in the YouTube algorithm, and I do appreciate appreciate each and every one of you guys out there. And I just got my alert for SPY. Holy crap. This is really, I just got my markets at or below alert. This is really slipping heading into close. So you guys remember a little, an extra note here that I want to mention. There goes the markets just closing. You guys remember how over the past 10, 12 days, it seemed like every time we got into power hour, the blow off top rally occurred, right? It seemed like every day when the markets were green, they would heat up in the last hour. Now that just happened in reverse. Now we got into power hour and we ended up slipping from 470 or rather 457 all the way to 451 on SPY, which is nuts. So this thing fell 1.4% in just power hour. So literally, guys, the entire loss for the day, which it went down 1.44%, the entire loss pretty much came in the last hour of the day. So power hour, guys, there's a reason why it's called that. It's a freaking crazy time period in the market, and markets swing in any direction during that time period. So that's a little side note now that I just looked at SPY and the markets just closed. So let's break down some stocks now. CCL is one that I think is worth watching right now. This went up 3.16% on the day, and what I'm noticing is with today's green day, and mind you, we had a very bloody day in the overall markets, with today's green day, this inverse head and shoulders is trying to play out. It's setting up nicely. What we're noticing is we have the left shoulder right here, head, right shoulder. The neckline is right around $18.50, $19. Now we're trading above $20. We closed above $20 today. So CCL is looking solid. It also took the highs out from earlier this week. And again, I don't know if I mentioned this, but I'll say it. It's above the moving averages on this 4-hour time frame. So CCL looks like it's starting to gain some steam, and not to mention, it's also at a multi-week high at this point. So watch out for a move towards maybe the low mid-20s. I guess we're technically in the low 20s right now, but I'm saying more towards, let's say, $22, $23, and we'll see where it goes from there. I mean, if this whole inverse head and shoulders, if this right shoulder panned out beautifully, it would go to about $24, but obviously not everything works beautifully in the stock market. It just doesn't work like that. So I'm going to set one alert at $20.50. I think that's a wise spot to put an alert right here. 2050 mark is at or above. So watch out for CCL. Enphase is another one that I'm watching, which is holding up quite nicely throughout this entire 2-day sell-off that we've seen. I mean, it's nothing crazy what we're seeing, but Enphase is holding up nicely, even though it's nothing crazy that we're seeing overall. It's good to see Enphase and other individual stocks doing well. So Enphase today went up 2.6%, up about $5 a share. And look, it looks like it's continuing the uptrend. I mean, nothing crazy is going on this chart. It's really nothing that's too funky. Overall, what we're noticing is a breakout of the moving averages. We double bottomed at about 115, 120. We got a golden cross about a month and a half ago, a little bit over a month ago, and it's still holding. We're holding the 50 moving average as the overall markets are red. That should show you that people are not willing to dump Enphase, even though we are seeing an overall sell-off. So that shows strength in the overall stock, which is great to see. So let's see, what resistance points do we have coming up right now? I see one actually where we are right now, no joke, about 205, 210. That was resistance in the middle of December. Another one here is at about 225, which was resistance in the beginning of December. So if we start pushing above 210, 215, guys, Enphase could really see another huge leg up. But if we see selling pressure around 205, 210, don't be surprised if this pulls back a little bit more, maybe down to 190, 195. We really have to play it by ear because overall it is kind of overbought, but it's showing momentum at the same time. So we have to keep it on close watch. So I'm going to put my alert at 205. I'll put one at 205. I'll put another one at 210. And maybe I'll do another one, a mark is at or below 1. Give me a second here, guys. So if it does end up pulling down, maybe we can get it at 190. So I'll do one at, maybe I'll do one at 198. Mark is at or below. If we start pulling under that point, that would be a sign that, hey, maybe it's starting to come down towards the moving averages on the 4-hour time frame, and we might be able to buy the dip at that point in time. So that's Enphase. ENPH is the ticker. Another one I want to talk about is MK MCC, which is McCormick and Company. This is the spice company, or at least that's what I know them as. They have all the spices, right? You guys, maybe they have other products. I don't know. I haven't really dove into it, but what I know them as is, again, a spice company. They have some pretty dang good spices, I'll be honest with you guys. I'm sure you know that as well if you've tried them, right? Pretty good spices. They might be a little bit expensive because they do have that brand name, but overall, that is what I know them as at least, right? And they did EPS. They reported 2 days ago. EPS came in at 63 cents versus 62 estimated. Revenue came in at $1.52 billion versus $1.47 billion estimated, and they had EPS full year 22 guidance above the estimate. So nice guidance. I'm not seeing anything on revenue guidance, but good EPS guidance, and they had a double beat on both EPS and revenue. And they also declared, I think, a 37-cent dividend, which is good for all you dividend investors out there. And today we had the stock do very well, even though the overall market sold off. This stock went up 2.6%. It closed at almost $100 a share, and now it's testing the highs from, I think, earlier this week. The highs from earlier this week being around $100.50. So if we could take those highs out, I mean, we're already above the moving averages, guys. So if we take those highs out, we might be running up towards 105, 110, which you guys can see 105 was resistance in the beginning of February, and we had 107 as resistance, which is that high point on this chart that was hit in the beginning of March. So the uptrend's holding. That's why I'm liking it. It's breaking out. Now we just got to break above $100, and from there again, 105, 107, that is where this could be going. And to touch on AMD again very quickly, guys, I did talk about it in my earlier video, and I mentioned in that video how I had no idea why AMD was going down, and I looked into it after filming the video, and now it's down even more. Jeez, guys, it's down 8.3%. We had Barclays downgrade them to equal weight from overweight, and they adjusted their price target from $148 down to $115. So that's a big, and even though Barclays is not saying, oh, sell the stock, we're underweight, it still hurts for a stock's price target to be cut by $33. So that completely wrecked the overall trend for AMD. It was at a point where it was breaking out of the wedge. You guys knew that because if you watch my videos, you should know that. And if you're in my Patreon, you know that I traded that breakout, and luckily I got out of it now. I bought it at 119, sold it at 122.50, something like that, and now we're at 109. Luckily I got out of it. So we'll see what happens now. Don't be surprised if we do get some sort of snapback rally, but over the next couple of days, this will probably be volatile. I mean, at this point, it's down 8%. It's under the moving averages after breaking out of the moving averages not long ago. And on top of that, it's looking like a falling knife. So keep this on the watch list. Be careful with it. If it comes down to 105, 100, I'll probably take a stab at it again. But as of now, I'm just being careful and just watching it, keeping it on the watch list. And I'm also watching Triple Q and TQQQ and SQQQ, the inverse ETF combo that I've been talking about a lot on this channel as of late. So you guys remember Triple Q, this pulled back down to the 50 moving average on this 4-hour chart. If this uptrend continues, which mind you, as of now, the uptrend is holding, if we get the confirmation of a breakout, let's say this thing runs back up over 365, it cracks back over 370, that could open up a nice opportunity for TQQQ, which goes up whenever Triple Q goes up. It's the bull ETF here, leverage ETF, right? So I'm watching this for an entry point. I'm not going to just dive right into it until the technicals tell me to do so. So, if we get that pop above 365 on Triple Q, maybe TQQQ breaks out of, let's say, $59, this might run up to $63. It might do that. So we're going to be watching this heading into tomorrow and next week. And honestly, tomorrow being Friday, I'm going to be a bit cautious. I don't usually go hard on Friday unless I find a nice setup. So I might be cautious, this, considering I've had a great week this week and last week, quite honestly. 2 straight, good weeks. I don't want to just mess it up by throwing money in TQQQ and then all of a sudden it dumps 5% on me intraday. So I'm going to be careful, and for that reason, I'm going to be watching SQQQ as well, which is the bear ETF. So if TQQQ, or rather Triple Q, let's say we have another red day, we'll be able to trade that SQQQ. So watch out for those two guys. Visa is another one I'm watching, which today went down 1%. And the reason why I'm looking at it is because overall, we're noticing a golden cross. We're above the moving averages. We took out 220, which was a huge resistance, weeks ago, months ago. And now it looks like we're holding above 220 as support. We held above it. We closed above it, which is a very good sign. Now I just want to see if buyers step in around these moving averages at around 220 to maybe get us back to where we were 2 days ago. Let's say we have a bounce back day in the markets tomorrow. We might be going back 225, 230 on Visa, and this is one that is still beaten down, even though it's ran up from 180 to about 220. It's still beaten down in the grand scheme of things because the all-time high was 250. We hit that back in July, and let me make sure. Is that the all-time high? It's got to be, right? Yeah, 250 is the all-time high, so overall Visa is still beaten down. If it's above 220 on the 4-hour time frame, there's upside, in my opinion, towards 225, 230, maybe even higher. And the last one that I'm looking at here, which is one that I'm not going to go long on, in fact, this could be a short opportunity, is Home Depot, ticker symbol HD. And you might be saying, Stas, Home Depot's down so much already in the past couple of weeks, months, don't short it. And you're right, I'm probably not going to short it. It's a risky game, but if I were to short a stock, this is one right now that's setting up pretty nicely, and if it collapses under 296, this is the reason why I'm watching it, guys, quite honestly, because we're testing the lows from about a month ago. Is that a month ago? Yeah, about a month ago, we hit 296. I'm telling you, if this collapses under 296, we could see another leg down like no other, even though it's already oversold. And this stock's going through a lot of problems right now. They're going through, I don't want to say growing pains because it's not like a new company or anything like that, but their sales are slowing down. There's a lot of pressure on Home Depot. So, this could continue coming down. Again, if we break 290, 295, this could come down quick. So I'm going to put my alert mark is at or below. And again, I don't really short stocks, and I'd rather just play SQQQ, TQQQ, like I mentioned a minute or two ago, because it's just too risky. Shorting, in my opinion, is a risky game. Sure, you can get in and out, time it, you can do it, and I've done it before, but I don't like doing it too much, and we'll see. Maybe I'll short HD, maybe not, but overall, we'll watch it. If it breaks 298, where could it be going? Maybe towards 250. If it gets really ugly, maybe down to about 265, 270. So watch out for these stocks, guys. Home Depot, Visa, AMD, McCormick, Enphase, CCL, and I'd love to know your thoughts. Let me know your thoughts on inflation, the markets. Drop me a comment, hit the like button, subscribe, and don't forget to get your free money from Moomoo. Today is the last day to get your free share of NEO. Use that link down below, deposit at least $100, and on top of that free share of NEO, you get up to 5 other stocks, each of which could be valued up to $3,500. I'm telling you guys, it's free money. Use that link down below, or go to StasserFest.com/Moomoo, deposit at least $100, and boom, you get your money. And with that being said, I'll catch you guys in the next video. Peace out.